Welcome again, friends, to your Tuesday videocast. I'm David of Etienne Business Solutions. Sorry, certified public accountant, business consultant. Happy that you can join me again another Tuesday. And remember that we meet here each Tuesday, where we take a pertinent topic and we look at some of the main ingredients. And of course, if you wish to take a second listen to this videocast, you can always check us out at Etienne's Place. That's our YouTube channel, Etienne's Place, where you'll find this and a long list of other videos that we have done on several different topics ranging from accounting, tax, business development, you name it, it's all there. And of course, I invite you always to share, like, subscribe, and leave your comments. Good. So without further ado, today we're gonna touch base on an area that has given rise to quite a bit of questions and back and forth, and people having different opinions as to what, and basically being unsure as to exactly how to navigate this neck of the woods. We're looking at S corporations, but our look at S corporations this evening is more in light of S corporation owners who are really called shareholders, and the whole issue of compensation to these owners in the form of distribution, and whether or not these distributions ought to be reflected on a Form 1099 at the end of the year. So if you're an S-Corp owner, the question is, so I have taken $10,000, $20,000 as distributions during the year, should I now be issuing myself with a 1099 at the end so that I can put that 1099 on my personal tax returns? And the simple one-word answer is no. But we look at a little more in more depth. Now, quickly, as the owner and officer or / shareholder of an S corporation, you wear two hats. You are not supposed to wear three hats. You're gonna see where I'm going with this. You wear two hats. One is you are the owner, shareholder of this company. By virtue of the fact that you operate in this company, you manage the company, you're the person who run the company, then you also wear the hat of an officer of the company. Now, in the capacity of an officer of any company, you're entitled to some compensation. In the capacity of owner, shareholder, you're entitled to distribution of profits. So those are the two titles that you hold in an S corporation. So I'll quickly touch onto a third possibility, which is a no possibility. There's also a different category of persons referred to as contractors, independent contractors. And those are the individuals who normally receive a Form 1099 at the end of the year for work, for payment that they have received throughout the year. Now, some are misguided to think that as an S-Corp owner, I ought to produce a 1099 for those distributions that I got during the year. So if you should do that, then you would end up wearing three hats. One as owner officer, receiving distributions. Two, owner, shareholder, and then two as the officer, the person who is running the company. And then you would end up receiving a normal salary. I will come to that, which would be your W-2 income. Now, if you should bring into the picture this whole 1099 at the end of the year, you're not going to wear three hats. Huh? As a contractor to your own company, wrong. as a W-2 employee, right? And also as a shareholder receiving distributions throughout the year. Let's focus now on this thing. One of the many requirements for S-Corpship is that you ought to pay yourself a reasonable salary. Okay, and a lot of the literature has reasonable in quotes, because there's no fixed figure, reasonable salary. So the easy way to determine this reasonable salary is to say to yourself, okay, given my position in the company, my duties, the level of responsibility I have, the level of qualification that it takes for me to carry out this function, if I decide that I do not want to be the one to execute these duties and these functions, and I'm going to get someone from the public to say, come, I want to come and carry out these duties, what would be a reasonable salary to pay that person? In other words, what is the going rate? What is the market rate of compensation for a person to come and do the things that you are currently doing? And that's a good way to determine what is a reasonable salary. Okay? Good. So you're required, therefore, to have this reasonable salary. You receive this reasonable salary in your capacity as a worker, as a staff member of your company. By virtue of that, come year end, you receive a W-2. So you're running a normal, full-fledged payroll. All taxes deducted, Social Security, Medicare, you name it. You're filing your 941s and everything. Normal payroll. That is where your reasonable salary or reasonable income will lie. Now, if you have satisfied that requirement, then you can tick the box for staff member compensation. But you also wear the hat of shareholder, owner, and you're entitled now to distribution of the profits that this company has made. Now, you will agree that it is usually at the end of the year that we ascertain what is the true profit that this S-Corp made for the year. But you seldom find S-Corp officer, owner waiting until the end of the year before taking any of that profit. So in addition to their regular salary through normal payroll, from time to time, S-Corp owner may take some distributions. Now these distributions is just you taking some of the profit before year end. Okay, so it's really a distribution of profits to you. And so we're talking about you getting income as a salaried person, distribution, which is distributed from the profits. Great. So come year end, the question is, okay, how do I report these distributions on my, for tax purposes? Well, of course, the W-2 portion is simple, straightforward, like any other W-2, goes onto your personal tax returns. The distribution now, let's talk a little about that distribution. You are allowed to take a distribution in excess of your W-2 income if you first satisfied that reasonable salary level. So, for argument's sake, if a reasonable salary would be $60,000 for the year, once you have run payroll for $60,000 for the year, it's up to you if you want to take an additional $10,000, $20,000, $30,000, $40,000 as distributions, because you have already satisfied the salary, reasonable wages requirement. Now, if you should decide that although reasonable compensation through a W-2 normal payroll is $70,000, that is reasonable, but you decide that you're only going to limit it to $30,000 for your payroll, then you'd have been short of that reasonable criteria by $40,000. So any distribution that you take during the year runs the risk of being reclassified from distributions to normal salary because you only took 30,000 of what is considered to be 70,000 reasonable compensation through salary. So you have to be very careful. You could take distributions, but if you have not yet satisfied the reasonable salary level, you could find down the road that some of what was distribution is now recategorized or reclassified by the revenue services as salary. And of course, once those income are reclassified, then you know what's going to happen. All those payroll taxes now are going to be recalculated on those amounts, and you end up with tax bills. Okay, that detail. Now, we come therefore, so we're assuming that you have done the right thing, you're taking the right salary, you take a distribution, and you come to year end. And so you say, how do I treat that? But it's a very simple, straightforward thing. Simple, straightforward, okay? That distribution is going to be shown as additional income on your tax returns. So on your personal tax returns, there's going to be your W-2 income and whatever distribution you took has to be reported. Now remember that this distribution is really you taking a portion of the profit of the company before year end. So it means therefore you could actually ignore the distribution because the distribution is the early withdrawal of profit. You could ignore that distribution figure and just look at what is the total profit that the company made at year end, because that total net with minor adjustments will be what your K1, the K1 from the S-Corp is going to transfer onto your personal tax returns. So then the typical S-Corp owner's personal tax returns will have W-2 income, and then we'll also have a K1, which is reflecting the profit that the S-Corp has made that belongs to the owner and is reflected on the owner's personal tax returns through the K1. That's it. So for those who are thinking of issuing themselves a 1090 at the end of the year, no, because what's going to happen? Follow me. The only place you can put such a 1099, especially we're talking about, the 1099 NEC for compensation, the only place on your personal tax returns that you can put that 1099, form 1099, if you should create one for the distributions you receive, is on a Schedule C. But a Schedule C is where self-employment taxes are going to be calculated. So I wonder if this is what's happening here. You'd have already paid your normal payroll taxes through your W-2 income, because each pay period you have your taxes deducted, Social Security, Medicare, which are the self, and everything is done. At the end of the year, you report the W-2. At the end of the year also, you report your profit on the K1 form. That K1 form is going to take profit to your personal tax returns. And yes, those profits will be taxable. This is true. But those profits will not be hit by self-employment taxes. However, if you decide that you want to issue yourself a 1099 to represent that amount of the profit that you took during the year as distributions, as I said before, the only place a 1099 can be shown is on a Schedule C on your personal tax returns. Once you do that, you're going to have self-employment taxes being calculated. So you see what's going to happen? You already pay taxes on the W-2 income. Now, you are causing yourself to pay additional taxes by way of the self-employment tax. And how did that come about? Because you decided to issue yourself a 1099, more than likely NEC, for the distributions that you received, right? Bad decision, bad decision. Now you have extreme cases where S-Corp owner decides, I'm not doing any payroll. And that applies to a lot of S-Corp owners. I'm doing no payroll. So at year end, they have no W-2 income. Okay? No taxes deducted, nothing. So all that they have been doing all year is just taking distribution, taking money, taking money, taking money. So if at year end they have taken $80,000, that was all taken via distributions, no W-2 income. So right away, they have not satisfied that reasonable salary requirement. Now, in a bid to correct the wrong, some S-Corp owners decide, you know what, I'm going to take some, I said 80,000 distributed, I'm going to take 30 or 40 or 50,000 of that, and I'm going to create a 1099 for that figure, which I will put on my Schedule C in my personal tax returns, and that figure will have self-employment taxes being calculated on it. So that is the way they say, okay, since I did not do a normal W-2 to have taxes withheld, I will now do the 1099 for a portion of the distribution, so that when it is put on my Schedule C, then it will calculate self-employment taxes. So by so doing, I would have satisfied income tax, self-employment tax, etc., etc. So you have that extreme case where people just go there. Then the more common situation, I would imagine, is where a person will have W-2 and then have distributions, but still decide that, okay, at year end, maybe misguided, maybe it's just misguided, at year end, I'm going to be preparing for myself, issuing myself from my company a 1099 form. That is definitely not to be done. The big danger in all of this, there are two big things I want to take away from this. One, as I mentioned earlier on, assuming that you have already satisfied the reasonable salary requirement, by doing a 1099, you're just subjecting yourselves to additional taxes unnecessarily. Okay? Because the 1099 will always attract what is referred to as self-employment tax. You paid it on the W-2, you're now coming to pay it now on the 1099. Okay? Bad business decision. On the other hand, for those of us who are going the route of saying, okay, I'm going to just take all the profit. It's going to be shown on the K1. It's going to all transfer over to my personal tax return K1 profit. Let's say 70,000, 80,000. And yes, that will be taxed, but that will not be hit by self-employment tax as is done through a payroll. And that approach is taken to avoid having to pay those self-employment tax, etc., etc. Now, the big danger with that, and I think I mentioned it earlier on, is that you run the risk, and there are many, many instances that are showing that the IRS does it, will do it, will continue to do it, and it can be a significant burden. Where you have decided no payroll, take all the profits on the K1, put it on the personal, and then the revenue department decide, no. Some of this money should have been normal salary run through a normal payroll with all taxes deducted. Let us say your K1 was 80,000. They may decide, you know what, 60,000 of that is reasonable salary. You see where that is taking you? Suddenly, they have reclassified or recharacterized 60,000 of that K1 80 into salary, and all the payroll taxes are now calculated. Both what you as an employee you have to pay, plus the matching that the company has to pay. But in addition to that, there's going to be interest, penalty, all kind of thing. Okay? Interest accruing, penalty for failing to this and failing to file quarterly returns at the 941s, failing to issue W-2s because you had not done any of those things. And so before you know it, you have a whopping tax bill looking at. So that is essentially the crux of the matter. That's essentially the crux of the matter. Let me see, I made some jotting. Let me see if there's anything that I left. No. So, if nothing else, zero in on this. You are a W-2 person in the capacity of you being an officer who is offering your service in the execution of the company's activities. You're paid a salary. You are owner, shareholder of the S-Corp, and so you are entitled to the net income, net profit, net reserves of the company. Those are the two things that you are entitled to. You are not a contractor of your own company. 1099s are made for independent person. You're not independent of your S-Corp. So no 1099 is to be issued. And yes, the question was asked of me. So if I do not issue a 1099 NEC, should I produce a 1099 miscellaneous? I'm saying no. Because remember, no, maybe 2 years ago was when we had the separation where, because the 1099 miscellaneous was basically used for all of those type of independent payments. Then the IRS had decided, the service had decided that, okay, we're going to change it so that the miscellaneous is strictly used for all payments other than those that are made to individual as independent contractors. So we had the 1099 NEC strictly for that, and the 1099 miscellaneous for other things like the royalties and the rents, etc., etc., etc. Okay, so that is critical. That is critical. So one more thing I'll add on that S-Corp issue. That reasonable salary requirement, because there's no hard number, it is based on the criteria that I mentioned earlier on. Then what you find is your total compensation package can be of a particular figure, where that total compensation package is made up of the W-2 piece and the distribution piece. So what you need to do then is to have a dialogue with your advisor, your tax preparer, your tax planner, to say, okay, you may decide, I really need to be having $5,000-$6,000 per month as my income of whatever sort, 6,000 what I want. And then he or she will have to sit with you and guide to say, okay, then let us split the 6,000 into two pieces. We're going to run this piece through payroll, normal, and then the other piece you will take as a distribution, normal, not a problem, and you're good to go there, right? So that will save you. But at the heart of this discussion is just that this 1099 does not work. You should not do it. There's another reason for individuals wanting to issue 1099s. And this is not just for S-Corp people, it also has to do with even other persons who are self-employed, who normally would prepare a normal Schedule C. What you find is that the LLC, the single owner LLC member, or the person who is just operating, as a sole proprietor, will receive the income, the prepare Schedule C. It shows whatever is a net profit on the Schedule C. That net profit flows onto the 1040, and then the self-employment tax, etc., etc., is calculated. What I find is that individuals that like those, if they want to go to, for example, the bank to get a loan, get a car loan, deal with any mortgage qualification and all those official type of things, when they present that tax returns, for whatever reason, the lenders, the institutions always insist, no, we need to see a 1099. And the explanation is given, no, it's my company. I work in the company. I generate the thing. So when you look at the P&L, when you look at the Schedule C, you will see my total income. You will see my deductions. You will see the bottom line, my profit on the Schedule C. When you look at the 1040, you will see where that profit was what came over onto my personal tax returns. But no, the banker or the mortgage company still insists, no, that will not suffice. I need to see a 1099 form, because I suppose they're saying that for them is a true indication that you had earned this money. In that case, the person say, I want a 1099. So a lot of Schedule C filers will want a 1099 to be done, which they still end up putting on their tax returns, which doesn't change the result of the tax returns in any way, but it satisfies the requirement for a 1099. And I think that may be one of the things that is causing some S-Corp owners, especially S-Corp owners who fail to run the regular payroll, so they do not have a W-2. They may have a whopping K1. Remember now, the K1 is what shows the profit that flows onto the personal. They may have a whopping K1, 60, 70, 80, $100,000 on that K1. And it is shown clearly on the relevant line on the 1040. But for whatever reason, the institutions, whatever it may be, feel that, okay, that K1 is just not satisfactory as a document to show that you have earned income. Yes, it is the profit that the company has made, and yes, the profit belongs to you, but I don't see any hard evidence where you have earned an income from. And I suppose one of the qualifiers for any, those mortgages and loans is really show me your income. Maybe it's not show me how much income or profit your company has made and given to you. You need to show me your income. And so, hey, what is a poor S-Corp guy to do if he had not run a normal payroll during the year and therefore has no W-2? Then I guess the poor S-Corp officer has no choice but to go and issue himself a 1099 to be able to present this thing to the bank, to whatever. And having done that, then they end up putting that same 1099 on the tax returns, and here we go into that craziness where you end up now getting yourself into all sorts of pickle, so to speak. Okay, so at the end of it, the bottom line, though, with all said and done, is that no is the answer. No is the answer to this 1099 for S-Corp owners. Okay. Not needed, not necessary, only cause you more headache, cause you more tax burden. It's a no-no. But remember, reasonable compensation, reasonable salary is a requirement. I'm not aware that the IRS has been very hard and faithful in enforcing this rule and this law. I'm not aware. But I know individuals have been stung. And when that needle come and prick you, then yeah, it's really a bitter one. So you want to avoid that at all costs. So that's my bit this evening on S-Corp, but specifically to do with that 1099, because I've had a few questions coming my way, and even persons who are not my clients calling my office say, oh, by the way, Mr. Etienne, we need to get some 1099s issued and thing. Sometime when you investigate, you find that a 1099 maybe for that person who is the owner, and it's not the way to go. It's not the way to go. So that's it for me for today, for this Tuesday's video cast. So as I said before, if you want to go back and listen and look, always check it out. It will be on our YouTube Etienne's Place lineup of videos. Go check it out. There are a lot of other things that you will find there that I think will be very useful to you. And just reminding you that between now and the foreseeable future, we'll be here each Tuesday at 8 p.m. We had started out at 7:30, but I think a lot of people tend to have a problem reaching, still on the road at times. So it's 8 p.m. each Tuesday for our video cast. So this is David saying thank you for hanging with me. Hope that this little tidbit will help you to better navigate your S-Corp ship and the way that you handle the distributions that you receive throughout the year. So next Tuesday, we'll meet same place, same time for another pertinent topic as we go through this exciting tax season. So have a wonderful, wonderful week or rest of the week. David saying bye.